Hey everyone, it's Will here with Flow Trade Effects. I'm bringing you guys a new video in the self-study series. This one's going to be on knowing which markets to trade for the day, and I'm going to give you guys a couple tricks on how to figure it out and how to pretty much find the markets that are going to be worth your time. Now, not every single market that is available to trade is going to be worth trading every single day. There's going to be a couple reasons why. For one reason, some markets are extremely expensive due to news releases, um, different catalysts, economic releases, whatever it might be. That can impact the spread and impact the ADR of the day. Now, the ADR and the spread are going to be the two primary tools in which we're going to be using to find out which markets are going to be worth trading. And then, as far as specifically taking our trades, obviously, we're going to be able to use our price action from there. But I also made a video about the price action, which you guys can find if you were to subscribe to my channel or just look through my previous videos that I uploaded. Otherwise, I might be able to tag that somewhere here. I'm not really sure how to do all that yet, but if I'm able to, then I'll definitely be able to do that. And it should be available somewhere around the screen at this point. But at any rate, like I mentioned, we're going to be using the ADR, which is going to be one tool that I use to show me exactly what the average daily projection in pips is going to be for whatever the currency pair is. So, for example, what we have behind me is the USD CAD, and this is the 1 hour time frame. We're looking at the past several days of price action. You'll see several different lines here marked in orange. Those are just support and resistance areas which have been created over the past couple days. And then you'll also see these EMA moving averages. Those aren't really particularly important to what we're talking about right now, but so you guys can just ignore those. They're not going to be relevant. But I do want to indicate more about this ADR indicator that I have located up here in the top left portion of my screen here. This is going to display two sets of numbers. The first one is going to be the daily projection. So this one is projecting about 108 pips. It says 1080 here, but that is really just going to read out into 108 pips. And then it also displays today, and then it marks 85, which indicates that since the market has opened up for this new session, it's technically a new day in the market because it's after 2 p.m. Pacific time. So it's only indicating 85 pips, which is about 8 pips for the day so far. And as you remember, the ADR projection of the day is 108 pips, so there should still be a good 100 pips left of the day still. And then I do want to take you guys over to the right side of my screen, in which you guys are going to notice this thing says spread. Now, neither of these two indicators that I'm pointing out, or tools that I'm pointing out, are native to your trading platforms. These are all custom indicators, meaning you're going to have to either find someone to code this for you or search online. If you guys email me or contact me or reach out to me specifically, I can provide you the specific indicators that I used. These were custom coded for this specific purpose because I intend to use these indicators very often. So I feel like they're worth having. But this one just displays to you the spread. Now, if you're on the mobile platform, I use MetaTrader 4 on my computer and on my mobile. Now, when I do view it off my mobile, it does display the spread for you relatively simply, and it does that without needing to do any custom indicators. So that's one way you can use this without needing to download the specific custom indicator, but it is just intuitive and it saves you time. As a day trader, it's something that you like. Time is a really valuable asset regardless of what you're doing in life. So anything that you could do to save a time and be both more effective and thorough seems like a win-win to me. And I like to figure out situations where I can do that more. So I got the spread here on the right, and then I use it in conjunction with the ADR by finding out exactly how expensive this market is at any given time. So as you're sitting here in the morning or whenever you're starting your trading sessions, you might want to sit down and figure out like how expensive every market is going to be because There might be some high impact newses, which can cause the spread for certain currency pairs to be extreme, and it might not be worth it. If you're not paying attention to it or you don't see it necessarily visually, you might enter a trade and have the spread almost, you know, 70 pips or 40 pips. This is relatively expensive. But when it comes down to just being able to like be mindful, it's definitely worth paying attention to in the beginning so that you don't, you know, walk into any trades unexpected. So how I like to figure this calculation out is usually divide the spread by the ADR and then be able to figure out what percent exactly is going to be left. And I think that anything under 5% is typically affordable as far as a trade goes, because I'll tell you why in 1 second. So this one we said was 1080 there, and then the spread is now 42. 42 that times. All right, cool. So by dividing the spread by the ADR and then multiplying it by 100, we're able to find out this what percentage of the spread is the ADR of the day. And in this case, it's only about 3.8%. So if you were to only take 3.8% away from this potential 100 pips left of the day, you're still left with a good amount of pips, almost 90 pips, over 90 pips. So that would be a potentially good position to take for the day, given you're able to set good risk management and you're able to get in at a prime area, given it matches up with your price action. Then I think that would be a pretty solid trade to take. Now, that's one way that I like to use this to determine exactly which markets are going to be worth trading. Now, I'm not going to say that just because a market is affordable and it can offer you a decent return given you get the right flow of the market doesn't mean that it's going to be worth trading, because I'll talk about the structure as well. So the first thing you're going to be wanting to maintain, and you could write these few things down. The first thing you're going to want to do is watch for the 5% rule and make sure that the markets that you're looking to entertain for the day match both the 5% rule and they are simply affordable and they offer you a good potential move for the day. Okay? So that's going to be the first thing you're going to be wanting to watch out for. And the next thing you're going to be wanting to watch out for is market structure. Now, here we have a clear trend that was going up. Let me just minimize this really quick. Here we have a trend that was going up for several days. Several days up, 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 up. Several days on the way up. And then this uptrend started turning from an uptrend to a sideways trend to a ultimately downtrend where price has met this previous support level several times, bounced away from it again, retraced back up to a resistance area, support level acting as a resistance area now, also indicating a lower high from this area, and then this was already a lower low from that area, and then boom, price broke through to create a lower low, and then several lower lows after that. So indicating that there could be a potential downward movement in here after we've already transitioned from this uptrend. So this could be the beginning or the intermediate meat of a potential new downtrend. Now we also have this area of support, which was a major area of support here, and this pretty much indicates that this was a strong level. It held for quite some time, several days, 1, 2, 3, 4, 5, almost a whole market week before the price was able to break through here and come down and create a new level. Now, as you guys know from my price action video, I'm not going to go too in depth about this, but I am going to use this for the market structure purposes. We like to see these breakout pullback continuations. So anytime we have a level which has been broken, we like to see if the price is going to retrace to it after it's made a sufficient, after it's settled down sufficiently. So this level has made one support level, another support level, and pretty much maintained those same support levels more or less before coming back up to finally try and retrace. So, given that market structure looks to be in line with the type of trades that we take on the daily, um, I would say that this could also qualify as a potential good market structure. We'd like to see if this level is going to hold as a resistance. If it does hold as a resistance, depending on where we get the signal from, whether it's a little bit above or a little bit under, we're going to be able to take our trade from that and potentially have a stop just above this area here and trail this back down towards at least this stop zone or this previous support level, which also lines up pretty nicely with the ADR projection for the downside. Now, the ADR projection for the upside also matches around the previous um, support turn resistance area, which we failed to completely retrace into. Now, those are two prime areas in which we can look to take trades off of. We'd obviously like to see this momentum back towards the downside because that one seems to flow with the market, but we aren't here to project or to, you know, see the future. We're just looking to flow with the market and using the market structure. We would like to see this level hold. If we see this area break through and market does go through with significant momentum up to this level, then we'd like to see if this area is going to hold. If not, then we would just simply not entertain this market, but we would only be taking trades in this specific market if this level holds for us and we're able to trade it back down here, indicating that this would be a continuation of the downtrend that's already in place. Now, that's going to be your market structure. If you want to get a little bit more in depth on how to use price action to identify your market structure or your key support or resistance levels, then I would highly suggest you guys view my price action video. I made it super easy and like extremely simple to follow. Um, Definitely would recommend that because I go much more in depth on how to really do this yourself. And we go over several chart examples. For this one, I'm just going to be breaking down the USD CAD. It's just no, the main chart that's open right now. And I think it also gives me some pretty solid examples on how to know which markets you're going to be trading for the day and how to view it because this is pretty average. This is just happening now. So the first thing you're going to be wanting to do is make sure that the ADR and the spread are affordable for the market that you're looking to trade. And then you're also going to be wanting to identify the market structure if there are any key levels of support or resistance or any areas in which you may find interest in the market or specifically where the market may find interest in the level. So between those two specific things, you should be well on your way to identifying markets that are both affordable and that will offer you potential moves that can, allow you to reach your goals, whether that is the UCAD forming a potential retest of a support turn resistance area, or if that is, a breakout of a potential support resistance level. Like whatever your trading style is, just make sure that the trade is at least affordable and then it offers you a good potential move for the day so that it will actually be worth your trade. Now, there are probably other criteria in which you can utilize to find out which markets you would like to trade for the day. But these are just the two that I would like to use, as long as the market is within 5% and it's no more expensive than 5% of the total move of the day. And there is a potential for a good movement utilizing the market structure, meaning I have potential to get in at a affordable rate at a potential key area. Those two things make me add that specific pair or market to my watch list for the day and make sure to be present whenever these potential moves happen. Now, sometimes we do miss moves, and you can't beat yourself up about that because, hey, I'm not on my charts all the time. But one thing that you can do is set alerts and just try to be mindful. Check in if you are expecting something to happen. Like, if this is important to you, then, prioritize it. But don't beat yourself up if you do miss an opportunity, especially something that may happen off a key level and it was just super textbook. You already seen it coming. The market is always going to be there, and there's dozens of currency pairs. As you could tell on the bottom of my screen here, there's so many more currency pairs that we could just go into, but it was it took me 15 minutes to explain the same one. So you can imagine that we could go on for days. Just I love this stuff, so I don't mind it. But I would definitely suggest you guys go through this exercise as well. Just go check out the ADRs and the spread. Um, if you guys need the indicator again, let me know in the comment section below, or send me a direct message. Let me know that you are interested in these specific indicators, and I'll definitely provide them to you. Um, when it comes down to this practice, you definitely just got to put the work in, go through the calculations, go ahead and do some little math. The math will get you engaged with this. Just divide the spread by the ADR and then multiply it by 100, and you should be able to find out what percentage of the spread is going to be actually going to be taken out of the move for the day. Because if it's going to be larger than 5%, it might not be worth it, because that's going to be added to your bottom line, win or lose. So just be mindful of that. If you guys like this video, give me a thumbs up. If you guys yeah, are interested in that, in these two custom indicators, you have any other comments, you have any other criteria that you use to figure out which markets you're going to be trading for the day. Do you guys use news? I didn't mention news at all because I personally don't use that in terms of determining which markets I'm going to be entering for the day. But what do you guys use to figure out which markets you're going to be trading? And yeah, of course, as always, subscribe so you guys can stay in tune and get the most recent updates for the upcoming videos. So until next time, y'all be well, stay happy, stay positive, stay profitable, and stay healthy. I'll see y'all on the next one though. Peace.